Hey Alpha Fam, Coach Jam here with another market update. Before we begin, I do want to say that nothing in these videos is financial advice. Everything's for educational purposes only. It's just my own analysis on the market. Also, if you're new to the Alpha Syndicate channel, if you could please give us a like, comment, and a subscribe, we really do appreciate the support. Let's get into the market, guys. So, we're starting to break down, all right? We've been planning this for a while, guys, and we've been talking about this for a while. This is looking very similar to what we did up here, all right? We had this bear flag right here, and that's essentially what it looks like we're doing right now. Is we're actually looks like we're breaking down from this bear flag. All right, guys? And honestly, this doesn't change anything with what we've been talking about. I still think we're in this accumulation range. All right, guys? And these accumulation ranges are going to be pretty vast. All right? It's not going to be, and again, even though this is breaking down from this pattern, look at how far down to the bottom of this range. Technically, it still has to go. Not only that, guys, once we're starting to see these breakdowns, what we need to be looking at is how far do we think Bitcoin can come down? What are some levels? And where should we be setting our limit orders? And we'll just use Bitcoin as an example. So there's a couple of things, guys. You know we've talked about this a few times before. The level that I'm really looking at right now, which makes a lot of sense to me, guys, if I put a fib on the bottom of this bear market floor and I go right at the top, this 618 makes a lot of sense. It's sitting right around the $57,000, $55,000 level. And this general zone makes a lot of sense for us to come down and wick into. All right, guys? And if you look at that from where we're at right now, that's still a pretty good drop. All right, guys? So if we do come down into this zone right here, and let's say we wick into it, that's still another 12% drop. All right, guys? And not only will we wick into it, the reason why we want to start talking about this is you want to have your limit order set at these levels. All right, guys? And I'm all for not wanting to catch a falling knife. All right, I hear this all the time. So I understand. But with these limit orders, guys, that's why you set multiple at different levels. So like, for example, if I wanted to set and build a position on Bitcoin, I would even have limit orders set at 50,000. All right? I would have them set at 50. I'd have them set at 55. I'd have them set at 60, and I'd have them set at 65. And I would increase the limit order as it goes down. So like this one, we almost pretty much can guarantee it's going to get hit. So I'd probably do like 10%. And then as it comes down to the bottom of this range, and let's say it goes to the 60, I'd probably do like another 20%. And then as it comes down, and let's say it hits some of these lower levels, I want to try to fill in the largest orders at the bottom. All right. And the good thing about this is if your orders don't get hit, so let's say it comes down and it wicks into the 55 and then bounces really aggressively and it doesn't hit your $50,000 limit, well, then what you can do is as soon as it does the retest for the confirmation and then the bounce, you can just close those limit orders and then just enter as soon as you see and identify some strength. So as soon as, like, let's say then at this point it flips to 50, it comes up and it uses a 50 as support, and then it starts to show momentum, then you can just enter the rest in at that point where you know for confirmation that we should be breaking back up and that we're leaving this bear market floor, the bottom is formed, and we are leaving this and we are starting the next uptrend. All right, guys? Because again, this is the reason why you want to prepare for this now, guys. And you're not going to get your limit orders set and filled on good days, guys. Nobody wants the markets to do horrible. Like, nobody wishes upon the markets just to do, terrible. But negative narratives and negative stories are going to be what creates the environment for these wicks down to happen and for these springs to occur. And I think a big reason why we're seeing this today, guys, is this. So apparently they've closed the Strait of Hormuz, which is weird because yesterday, and you can actually come on the 15-minute and see this candle that we had. Yesterday, Trump, after the markets closed, made an announcement that they were basically doing another additional 10-day pause on strikes on energy facilities. All right? And then all of a sudden last night, the markets start to dump. All right? And this is because now it is having reports that the Strait of Hormuz is no longer open and accessible, which has got oil ripping. All right, so now we've got oil running again. All right, and you can see yesterday when that announcement was made how oil dumped back down, and now it's ripping again. All right, so that's the reason why these accumulation ranges are so hard to play, guys. And this is the reason why a lot of times people get chopped up and they end up leaving these markets because they don't understand what's going on. And then essentially what's happening is they're getting chewed up in between this price action, all right? And they get really bullish when things start to go up. And, we get these announcements like last week. We had these green days and everybody gets excited. And then all of a sudden, some more announcements come out. There's more strikes. There's more attacks. And then the market dumps, all right? And that's what essentially an accumulation range is, guys, is just a period of time of bullish and bearish news combating each other. All right, and in bull runs, guys, what you end up having is just a bunch of really positive narratives driven by liquidity and conditions for these markets to run. Same thing goes for bear markets. It's a set of conditions that are really negative that bring the markets down, and then eventually you get into what is called the accumulation range, where we start to form a bottom, where the negative starts to kind of be in the past, and now the markets start to price in positive, future information and future catalysts and narratives that are going to make the markets pump. All right, guys? And that's why these accumulation ranges drive people crazy, because you get the bulls on one side that get you super excited every time we start to break out, and then you get them to get really, and then all of a sudden next week you get some negative narratives come out and the markets start to nuke, and it's the exact opposite. So you get a lot of this during these periods. We've been talking about this for a while, guys. Stock market has been correcting. It has lost this first support on this first fib right here, guys. And now I would be looking at the 382 probably to be the next level if it decides to come down. And again, it doesn't have to, guys. It's not a guarantee just because it, leaves one level. It has to come down to the next. That it's just a general, it's just a general line that you can look at, for a potential bounce zone. But again, it doesn't have to necessarily come all the way down, but we have lost this. We've been talking about this for over a month now, how the stock market's been showing weakness, how I think it's going through a general corrective as well, along with the news, with the war. And I think Trump knows too, guys. Like, he does not want the markets to nuke neither, guys. So, you're seeing a lot of backtracking from the Trump administration, trying to bring some certainty, trying to get this market where it's not just turbo nuking every single day, and they're trying to bring some certainty back. I actually watched a Trump interview where he was talking about Iran just sent them 8 to 10 ships of oil. All right, guys? So you're getting a lot of conflicting viewpoints, a lot of conflicting information, and until we get some actual certain facts, you can expect this chop to continue to happen, guys. And honestly, this is a great thing. Take advantage of it, because this is the opportunity for you to get those limit orders set and to build your positions prior to the bull run, guys. The bull run's going to be coming, guys, and it's going to happen. It's going to happen fast. Not saying it's going to be tomorrow. I'm not saying it's going to be next month. I do think we have a potential chance to start breaking out in May, based upon the Fed guy coming in. But even at that, let's say it extends over to after the summer, guys, you want to be fully prepared for Q4, period. You want to be fully prepared. And again, if this is the first time you've ever seen any of my content, guys, my name's Coach JM. I've been a digital asset investor for over 5 years. And if you want to learn this stuff, guys, if you want to understand the macro, the fundamentals, the technical analysis, and how we combine it together, if you want to get coached and mentored by somebody like me, click the link below, guys. We'll see you inside.